Are you a successful and or profitable trader? How's your trading going? Are you making money? Are you breaking even? Or are you actually profitable? Or are you still losing? Let me tell you, every trader needs to know what I'm going to talk about today. Every trader needs to know this system or this strategy when trading. I've been doing this for over 30 years and I keep it simple. Somebody called me old school the other day, and I sure am old school. I'm a lot older than most of the traders here on YouTube that are showing you how to trade and promoting to you that you can possibly make a 90% win rate, which you can't. I don't know anyone with a 90% win rate in real life. Trading is a 50-50 game. Now, that's the whole point that I'm going to get over to you today, and I'm going to show you the charts. I'm going to show you how we trade our system, how we use support and resistance to make a profit in the stock market. But it's not about the edge or the system as much as it's about your mentality and your emotion and your psychology. Because as I always tell you guys, trading is a 50-50 game. In other words, 50% of the time when you take a trade, there's a good chance you could win. And there's 50% of the time, 50% of the time, there's a good chance that you could lose. And that's the whole problem with trading. Well, it's not a problem. That's the whole crux of the matter, let's say. That's what makes trading what it is. There is no magic pill. There is no magic system out there or fancy fandangle stars align on the left and the moon turns green and then the stars align on the right system that will make you a 100% successful trader, because that's what's being promoted to you. What's being promoted to you is start trading, put $100 in the market, trade it over and over again 10 times and make $1 million. Now, I'm not saying it's impossible, but you got to be very lucky to do that. It's a bit like walking into a casino, putting all your money down on black and winning. That's the luck of the draw. There is no such thing as winning 10 trades in a row with skill. When you trade in the market, you've got buyers and you've got sellers. Let's say all the buyers believe that the market's going long and all the sellers believe that the market's going short. Whether it's Forex you're trading, whether it's indexes you're trading, whether it's, I don't know, the sale of the moon that you're trading. It doesn't matter. Somebody believes it's worth buying and somebody believes that it's actually worth selling. Now, why is that? That's because there's so many different systems in the market, so many different ways to trade. Would you believe it? There's more than one strategy. There's more than one system. And when you buy, you're buying from another trader that owns that particular stock. He believes that it's a good sell. You believe that it's a good buy. So why do you think that you would have a strategy that is 100% bulletproof, that is 100% successful? Why would you believe that? Why would you think that? Every single edge and every single strategy in the market is put there so that you will have an edge. Now, our system that I'm going to show you in the charts today is effectively to help you to manage your risk, to help you understand what managing your risk is all about. Because what's going to make you a successful trader at the end of the day is not the system. It's how you trade the system and how you trade the strategy. In other words, what I like to tell you guys and show you guys is lose less on your losses. Take your stop loss, measure your stop loss, and make sure you know how much you're going to lose. So let's say purchase the trade, and if you're prepared to lose $100, say I've paid $100 for this trade, and that's it. If it loses, I've paid $100 and it's gone, I'll move on to the next trade. But if it wins, add to the wins and follow the win for as long as possible. Because the other thing that you do, besides trying to average down on your losses, is you try to jump out of your wins too early. You see yourself in a profit and you get all excited. There's an emotion inside of you that gets really excited when you're winning and you're making a profit. But there's another emotion that comes right in with that emotion that says, I don't want to lose all this profit that I've just made. I've got all this profit now, and if I stay in this trade, what if I lose all this profit? What then? That's the emotion. And the two emotions collide. And you know, the overriding emotion that wins is always the one that says, oh, let's keep that profit and get out. And then you watch it go to the moon and think, why didn't I stay in that trade and make double what I actually made? And that's the problem that you have. When it's losing, you tend to add to it and hope that you'll break even again, and you just keep adding. And the trouble, the more you add and the worse it gets, you keep adding thinking, I'll get out of this. But there is a point where you just like, I can't keep going on with this and I can't keep adding to this, it's just going to get worse. So you think to yourself, okay, there is a point where I'm just going to have to give up. I'm just going to have to get out because I'm so many thousands into this trade. I'm just going to have to dump this trade. I'm going to have to just get out of this trade and walk away. And you know, the minute you do that, the market turns and it goes the way you expect it to in the first place. And then all that work that you put in to try and save the trade actually comes to fruition and it starts going the other way. And then you do a revenge trade and you try and get in again. You revenge trade it going the other way, thinking, well, I'll just get that back. And then it turns and goes back down again. So revenge trading is another problem because you feel like you want to get it, you'll go with it and try and get it back, and then it turns on you anyway and carries on making a bigger mess than what you already had. Which is why I say pick the trade and then don't call it a stop loss, call it an invalidation. And when it's invalid, in other words, it goes into that point that you've chosen where you say, I'm going to get out of the trade here. This is my stop loss. It's an invalidation. Because if you look at it and you look at it today and say, would I take that trade right now if it was in that position? And if the answer is no, the trade is invalid, let it go, take the loss and move on to the next trade, whatever that might be, whether it's a different instrument, whether it's a completely opposite trade to the unit that you're on, whatever the case, just move on. That's as easy as it gets. It's managing your risk. That's what it's all about. Every trader in the stock market needs to understand this. You need to understand that there is no magic pill, that the market gives you a 50-50 chance to win or lose. And the only way that you can make more by winning is to make more on your wins and cut your losses fast. And that's how you become successful in the stock market. It's not about my system, my support and resistance. It's not about price action. It's not about supply and demand. It's not about fair value gaps. It's not about ICT. It's not about moving average crossovers. It's not about Fibonacci. That's got nothing to do with it. All that does is give you a system to help you manage your risk with. That's all it does at the end of the day. But let's go and have a look at the charts in a moment. And then after we come back from the charts, we can discuss what we're going to talk about next, which will be on Wednesday. And we can see what we can do to improve our trading so that we could win on a prop firm challenge, for example. That will be a big help. But before we go to the charts, just let's get over the most important information that you need to find out on this video today, and that is 80% of traders do lose money. And if you don't like losing money, you most probably shouldn't be trading. You don't like risk, you probably shouldn't be trading. Be very careful of risk, guys. The stock market is a risky place. Drop down to the description, get your free Forex book. I've got a free Forex book for you there, not charging you anything for it. Just click on the link, go and download it. It's a small PDF. It's about trends, that sort of stuff. It's not the be all and end all, but it's a little bit of information that you might like, and it might help you with your trading journey. And as well as the fact that don't forget that I put Trade of the Day out every single day on that blog for you. It's just an idea. It's not trading advice. I do put a video out for the members every day with regards to Trade of the Day and that sort of thing. But you know, it's time out of my life. So if you want that, go and join the membership. That's great. It's a YouTube thing. So without further ado, let's go and have a look at the charts and let's go and see how you can trade and manage your risk the best way possible on the charts. I do kind of tend to use the same thing over and over again, but let me tell you guys something. Changing your system's not going to make it better, and making money is boring. Let me tell you, it's not about excitement. It's making money the real way is doing the same thing over and over again correctly, and it's boring. But we'll talk a little bit more about that after you've looked at the charts. Let's go to the charts first. Managing your risk when trading is super important. Every trader should really know this and should really understand this. Now, I've taken these levels from the day chart. Now, you guys, if you've watched my videos up until now, you will know that I always take the levels from a higher time frame, and then I do add levels in the time frame if I need to. But it's good to take the levels from the higher time frame and determine what the general consensus is on the direction of the trade. So if we were to go and look at the day chart on this product, this was on here, this is the DAX, and then you have a look at what you've got. So what you've got on the day chart, let's make it a little bit more readable. Oh, it is readable, it's quite fine. If you look at the day chart here, you'll see that the DAX was nice and bullish and there was good market structure going up, and then it started to falter and go along in a range. But in that range, you would normally expect it to carry on upwards, but it didn't. It broke down through its support level and it did a break, and now it's doing what we call a retest. So that says that this is most likely a short trade. So we're thinking in our minds for the DAX today, short. Now we go to the lower time frames, whatever it might be, the 5 minute, the 4 hour, the 1 hour, but with the knowledge that we're feeling short on this trade. But if we look at the 4 hour trade where we want to take a trade here, we look at this, there's the range that we saw, there's the break through the support, and that's a big break through the support. But we know there was a bit of turmoil in the market recently, which may have caused this. But this is a big break through the support, which says that it's gone short. Now it's coming up and it's doing the little retest. Now you've got two choices. Now you can wait for it to break back through this resistance, pop out the other side and say, well, we're going long again. Or you can expect that there's going to be a big red candle coming out of this resistance and we're going to go short down to the support. Now you want to take this trade knowing that it's a 50-50 chance. You're not going to take the trade while it's inside here. You're going to give yourself as much chance as possible of winning. So you're going to wait for it to break out either side before you make your choice, long or short. Bias is to the short and we're expecting it to go short. So I'm going to do this based on the fact that it goes short. If it does decide to go short, you're going to get a red candle coming out of the resistance and it's going to close. And you've got to wait for the candle to close before you take the trade. Don't take the trade until the candle is confirmed. Then what you do, the most important thing is you decide how much risk do you want to take? How much money do I want to lose? Am I prepared to lose? That's what the trade's going to cost you. Your stop loss is going to need to be above the resistance level, and it's going to need to be a reasonable distance away, and then you've got to say that the trade is invalid. So you've got to be, I'm going to put my stop in an area, my invalidation in an area where I know that this trade is no longer viable as a short. It's now a long trade. Now there'll be some stop losses here in this area at these lows, these previous lows, because that's where the other traders put their stop losses and orders and automated stops. So if you're able to put yours just beyond that, you should be okay. You should be just far enough away from it. But you know, you don't want to put it up here. That's just too far away. You want to put it as close as possible so that it's in a reasonable area. And also where you can basically say that this trade is no longer a valid trade. Why would I even trade it if it closes there? Then what you got to do is also make sure that the candle that pops out here towards your stop loss is also a closed candle, because that will confirm that your trade is no longer valid. Because sometimes things can pop out and they can pop straight back in again, leaving a long tail. And if it leaves a long tail on it, what that's telling you is there's a hell of a lot of orders that got taken out. There's a hell of a lot of sellers in the market and you might as well stay short. So you need a closed green candle here for it to say to you, okay, that trade is no longer a valid trade and we're not going to take it anymore. Then you can take your short trade all the way down to the support. That's as simple as it gets. It's not a complicated thing. If you look at this trade, for example, here, I'm just trying to have a look at the euro US dollar, and so many people would be taking this trade right now, but it's sitting inside the area and you cannot call whether this is going to go long or whether it's going to go short. So when you take this trade, if you want to manage your risk correctly, you must wait until you've got a confirmed green candle out the top or a confirmed red candle out the bottom, which tells you this is a good trade. Now, a perfect example of a failed trade, but it hasn't failed completely yet, is this particular trade here. This was a confirmed green candle out of, it broke through the resistance and gave you a confirmed green candle. When you get a breakout, when it's been a resistance for a long time and it breaks out, rather wait one candle just to see if it's going to retest or if it's going to continue, because you often get what this is, a pincer top, where you get the red candle right next to it, and that's a sure sign that it's not going to continue long, it's going to come back and retest. That's not to say you did the wrong thing if you took a long trade out of here expecting it to go long and it wouldn't have taken your stop loss out yet, because your stop loss would be below this level, round about here. So you'd still be in this trade effectively, and it would be a couple of days that you've been sitting in this trade waiting for it to do something. You could say, well, I've had enough of this, I'm getting out, walk away, or you could hold on to it with the expectation that this is still going to go long, because the bias on this trade is actually still to the long side. If you look at the trade, it's still got a lot of opportunity to carry on long, but your stop loss would still be around this area. But I wouldn't take this trade inside the area. I might have taken the trade there, but me being me, I would have seen the breakout. I would have waited for this retest, because if it hits resistance a few times and comes down, that I would have taken short. I wouldn't have worried about waiting for any retests, because that's just, it's hit resistance, come back, no big deal. But when it breaks through, then I'd rather wait an extra candle just to see what's going to happen, because breakthroughs often fail. They don't continue on. Very often you get a price breaking through a resistance level or breaking through a support level, and then it doesn't carry on going. It stops and comes back. So watch out for those. Those help you to manage your risk. Keep an eye on that. But if they're just hitting resistance like this, hitting resistance, and then you want to go short, and it comes out with a nice confirmed red candle, you can take that trade. You don't have to wait for a retest there, because that's just, it's something that, look, it happened there, it happened there, so it's happened a few times. Same goes for the support. Hits the support, comes out, green candle, take the long. Hits the support, comes out, green candle, take the long. It'll eventually go long and it'll be fine. But when it breaks through like this, be careful. Watch out for that sort of, it doesn't carry on scenario, and give it a chance to just come back and retest as such. And I think this is what this one is doing at the moment. It's retesting, and it'll most likely, the bias is that it'll go long. It'll get a green candle out of here and carry on the long side. So that's effectively how you manage your risk. Just keep your risk just below the area. And as I say, calculate, trade within your means, calculate how much you want to pay for the trade, work that into your stop loss, and that's as big as your trade gets. Yes, you'll make smaller wins, obviously, because your trades will be smaller because you're calculating them down into your stop loss, but then you also managing your risk, and you're not blowing your account every 5 minutes. So you've seen the charts, and now you know how the system works and what the system can do for you. But as I was saying just before the charts, making money is boring. I had a guy say to me, but your system's pretty much, your videos are pretty much all the same, and it's about the same thing over and over again. Show some different systems. And okay, I will do that. I'll show you some different systems. Like I have shown you in a few of my videos, one or two here and there, I've shown you a few different systems. I've shown you Fibonacci, and I think I've shown the moving average crossover. I showed you another indicator recently which predicts the future, and we'll do some videos like that. That's great. I don't mind doing that. And if you've got any specific requests on any specific systems that you would like to know about, ask me. I'll show them to you, because like I've said to you before, I do go over all the systems in the market, and I try and stay ahead of the system so that I know who I'm trading against. So most of the systems I do know how to trade. I just don't trade with them. As you know, I don't trade with mega indicators. I trade the support and resistance system. And as I say to you, the videos are going to be pretty much the same over and over again, because that's the system I trade. And making money can be boring, because you do the same thing over and over again. But I need to reiterate to you how you can make money and how you can trade. And if you keep on watching, it absorbs, it helps you, because there's always something different in each video. There's always a little bit extra, maybe something that comes out that over my 30 years of experience that I've learned, and maybe it just comes out to you so that you can understand it a little bit better. Maybe I didn't bring it out in a previous video, or it hasn't come out in the system, and it pops out in this video, for example, and it just helps you understand your trading a little bit better. So it's good to do the repetitive videos, to do them over and over again, so that you can learn from it and get better at it as we go. I am going to add in the future a couple of live videos. Maybe we'll take on a prop firm challenge for a bit of fun. I don't know. We'll do something, but we'll have a look at that. But what's holding me back at the moment is obviously the technology. I'm old, guys. I've got to figure this out. So let me figure out the technology of doing the live videos and that sort of thing. And yeah, I promise we'll get to that at a stage. Obviously when we got a few more subscribers as well, so hit the subscribe button if you haven't subscribed, because that also helps in the long run, because then I know I've got a lot of people that are going to come and sit and watch the live video with me at least. So guys, the next video on Wednesday, I'm going to talk a little bit about prop firms and how you can pass a prop firm challenge, what the best method is to pass a prop firm challenge, probably the easiest way, because so many guys are actually failing these prop firm challenges and it's costing you an absolute fortune every single time. I can see why that is, and I can see what the problem is. In the next video, I'll talk to you about that, which is on Wednesday, if I'm not mistaken. So guys, thanks a lot for watching. Until the next video, cheers, thanks, and bye.